Hi, I'm Lisa K. Donner, along with Andrew Moran, Sarah Cowgill, Jim Veit, and Scott Cosenza. And this is the Conservative Five, a product of Liberty Nation, where truth is making a comeback. The price of crude oil is skyrocketing. Americans, already experiencing uncontrolled economic anxiety due to rampant inflation, are now finding yet another reason to fume at the White House. As the Rolling Stones sang, it's a gas, gas, gas. Folks across the country are talking about the pain at the pump. Yes, prices once plateaued over the holidays are now escalating. If we continue to see this trend, we'll revisit July 2008, when gas reached a national average of $4.11 a gallon. Again, this was the national average. Some places in the U.S. saw closer to $5 a gallon. No one wants those days to come calling again. To help us navigate how and why this is happening, we'll begin with our Liberty Nation economic guru, Mr. Andrew Moran. Hi, Andrew. What say you about now that we're not energy independent any longer?
Yeah, according to Joe Biden, it's all about mom and pop gasoline stations who are price gouging families. But if you look at the entire energy landscape, this is not the case. I was talking the other day to an energy analyst, and he was telling me that oil and gas companies are apprehensive about ramping up output because of all this regulatory uncertainty and this whole broader green agenda from the administration. If this were 5 years ago and prices were trading at $85, you see a massive increase in production. Which you did see last 5 years ago, prices were what, $65, and they're still pumping out oil because in the United States, to be profitable, you need at least $45, maybe $50 a barrel to be to make money. And then of course, there are so many other aspects involved too. OPEC, they're being modest in their price increases. The other day, there was an attack on an UAE oil facility. The Turkey-Iraq pipeline is damaged. So there's just a wide range of factors going with all these gasoline prices. But, Biden thinks, hey, if I just, investigate mom and pop gas stations and, I release 50 million barrels of oil reserves and everything's gonna be okay. But if I make one quick point here, that 50 million barrel release from the SPRs, that's actually, that includes 15 million barrels that are already dealed upon with India and China. So I thought that's interesting. So Biden's not doing anything. He's making the matters worse by not telling oil and gas companies in the U.S. to just drill, baby, drill.
I'm going to throw this open to the whole panel and somebody pick it up. I know this isn't anyone's specific area of expertise, but what if Putin does go into Ukraine? And then there's all these supposed economic threats actually come to fruition. Let's just put it that way. How will this affect our energy? Does anybody have any idea?
So the energy crisis in Europe was already being amplified before the Russia-Ukraine-U.S. tensions going on. These pipelines were not going into Europe. Europe relied too much on green energy. So I think for the most part, the United States, on the supply side, will not be as affected. The problem is that it would dramatically raise the price of energy. So oil is right now at $85 a barrel. That could easily go to $90, $95. Natural gas is at $4, could go to $5. Gasoline could go, higher as well. So I think from the United States, prices are the main factor, not so much supply, because we already the United States produces about 11 to 12 million barrels per day.
Jim, you drive some pretty big vehicles. How is this affecting you and your family?
Well, yeah, actually, out in the rural areas, we're actually a bit more sheltered from the crazy fluctuations in gas price. We see them, but it's usually not as bad. But for example, I don't think we ever saw in the last several years the $4 a gallon mark that was, the national average.
Okay, we're not talking the last several years. I guess we're talking the last 12 months.
They've gone up here. They've got, in Indiana, they've gone up here. We're the hub of trucking. So you're also looking at and farming. And you're looking at, diesel has gone skyrocketing high. And that's something that, filling up my little farm truck costs me about $50. That's every time I go to the pump. And that's from $30. It's gone. It's people are noticing it. It's a real pinch in the wallet when you live in a more rural area and not the city areas.
Scott, Tim and I were laughing the other day, the old days, and I'm old enough to remember, fill it up with high test. Well, when you're looking at premium now, wow, it's really expensive in the DC area. It's a little better here in Florida, but it's really gone up. Premium has just seemed to have skyrocketed.
I think there might be some sunshine here on the gas price story, which is that it's not necessarily that fuel prices are increasing so much as the dollar is becoming increasingly worthless. So that's maybe a positive news for gas producers.
Well, but Scott, isn't it really both? I mean, the dollar is.
It is both. And the other thing too about the incursion into Ukraine and any potential sanctions is that Europe cannot produce enough energy for its own needs. It is a massive importer of energy from Russia and the United States too. And if they have importation issues because of sanctions, well, the price for gas and any kind of energy in the United States is going to skyrocket for domestic consumers. It's going to be a real problem.
Hey, look at the latest data. The LNG, or liquefied natural gas imports to Europe, have been skyrocketing this year. That's one of the reasons why natural gas has eased a bit in the last few weeks.
We have the issue of the Nord Stream 2, and Europe and Germany haven't even given the okay to go ahead with this. Doesn't that sort of make it worse for the people in Europe, where they, pay petrol prices?
Well, some of the comments I've seen from analysts is that I think if there's not a military conflict occurring, then natural gas prices or oil and gas prices in general would ease somewhat because of all the imports that they're doing. And a lot of these companies or a lot of these countries, for at least to power their countries, are going back to coal and all these different fossil fuels. Russia has said before this whole situation intensified they were saying, okay, you know what, we'll open up our markets to you. We'll increase our production. We'll increase our output and our exports. But there was a lot of pushback because they were saying, oh, well, if Russia gives, Germany and all the European countries more energy, then they have, a stranglehold over these countries. And therefore, Russia is going to be more powerful when, when you're desperate to keep your power lights on after investing all this green energy, you have to deal with Russia.
Well, another domino ready to collapse the entire Biden administration's economic plan will have to pay the price, at least in the meantime. Some experts believe gas prices will drop just prior to the midterm elections. Imagine that. We shall see. Thanks, panel, and thanks for watching. That's it for our Conservative 5 panel today. Check out our other C5 shows and segments on your favorite video platform. YouTube, Vimeo, Rumble, we're on them all. As well, Liberty Nation has its own Roku channel where you can see all of our TV productions. Thanks so much for tuning in, and remember, surf on over to libertynation.com. Sign up for our new member zone, just $17.76 for the year. Thanks to our fantastic editor and post coordinator, Frank Diorio, and our executive producer, Sarah Calgill. I'm Lisa K. Donner, editor-in-chief. Thanks so much for joining us today. This has been a production of libertynation.com, where truth is making a comeback.